Okay. This is 1 2 test 1 2. This is 1 2 test 1 2. Okay. Maybe and increase it a bit more. Okay, this should be good. It shouldn't be too loud. And never mind, let's bring it down back. It does something like algorithm please. Okay. So back to this. Let's start. So welcome back to another live stream. This one I'll be continuing to talk about the chapters regarding money. So this will be regarding your Form 5 2 chapters, insurance and taxation. Let's get into it right away. For insurance, there are 4 types. The simplest one being medical insurance. Then you'll have your insurance for your car, motor insurance, which has 3 types, which is quite troublesome. Which is probably the most important type. And then you have your property, that's tax. You have your travel insurance, the one with groups and whatnot. And then you also have your you have life insurance, health insurance, fire insurance, motor insurance. 4 types. Yeah. So let's go through one by one. Medical and health and medical are life insurance and medical insurance are the most easiest ones. Fire is a bit involved. Motor is very involved because there are 3 different types. So let's talk through it. Okay. I'll draw a line, then we continue from here. Okay. Enlarge, 100%. Cool. Okay, so over here it says that this person, okay, this would be in regards to insurance. Okay, first off, you see that this is the annual premium rate for every 1,000 face value offered by this person, this insurance company, and this will basically be for life insurance. So life insurance will give you a table. It will tell you that which category has how much annual premium rate, and then based on how much you want your plan to be. So if you sorry, the younger you are, the less risk you have of dying the next year, so the lesser the rate you have to pay. The older you are, the higher risk you are of literally dying or having any accident, but this is basically we focus on dying basically, so the loss of a life, because this is life insurance, not health insurance. There's a different thing. So life insurance, the younger you are, the less you have to pay, the lower your rate is, versus reverse for how you reverse for if you are older. If you are at high risk, then you have to pay a higher rate for your insurance. So, but your usual case, in terms of the questions, we don't really talk about you have a high risk occupation like being a construction worker, stuff like that. We don't really talk about that. We talk about more like anyway, we talk about more like the only thing we really talk about is smoking. So you either smoke or you don't smoke, because differentiating between the high risk occupations is a bit too difficult for the sake of the question itself, for the sake of the simplicity of the question. So we talk about you either smoke or you don't smoke, and therefore you have the table that you see on screen right now. So for this one, you depending on how is your client, how is your clientele, what conditions would they fulfill, they will apply different rates. So you see part A, it says a fund is a healthy 32-year-old man. Also 32-year-old, we look at the middle two columns. Then we will look at the, give me a moment. Okay. Okay, we look at the, let me just, yeah. We look at the middle two columns. Do you see my cursor? Probably. You look at the middle two columns. So that will be 32 years old, and then he say he bought a 10-year plan with a face value of 2,500,000 and 250,000 calculate the annual premium to be paid. So a face value, so the premium to be paid is like this. Let me just write it out. Your premium in this case will have premiums to be paid is as such. So the face value 250,000, you divide this by 1,000 because your rate is calculated for every 1,000 face value. So you divide your face value by 1,000, then you multiply by the corresponding rate. In this case, he's 32 years old, he doesn't smoke, so there will be the third column, 1, 2, 3, third column, and then he wants to buy a 10-year plan, so that will be 3.24. So you multiply this by 3.24, and that's basically it. So just calculate out. This will be 250 multiplied by 3.24, you get 810. So this will be the annual premium that he has to pay. So this the annual premium that he has to pay. So this is that And then this is part A. Okay, part B. When a fund wants to subscribe for the 10-year insurance, the insurance agent of this company suggested that he buy an annual renewable plan. Calculate the annual premium if one changes his mind to buy an annual renewable plan with the same face value. Annual renewable plan is basically the same column, 32 years old, non-smoking, but we look at the number below it instead, so that would be 3.17. So in this case, same thing, easy game. Just do the exact same thing. So your face value divide by 1,000, then you multiply this by the corresponding rate, so there will be 3.17. So you multiply by 3.17, you get Ringgit Malaysia 79250 cents, and that's basically it. So life insurance is the easiest insurance in the entire chapter. So that's that Okay, done. Next. Okay, motor insurance. This is one of the more involved ones. So let's talk about it. So this would be so this would be life insurance. Okay. This is when it's yeah, indeed. Okay, let me decrease. Okay, so motor insurance is a bit more involved. Okay, motor insurance, the things that you need to know are, okay, let's look at the question. So this table basically tells you how much you have to pay. This is basically your base premium, your basic premium, how much you have to pay based on where you are, what type of policy you're buying, and how much CC is your vehicle. This is motor tariff, motor insurance basically. So the question says, this person, Mr. Joseph, moved from Kuala Lumpur to Kota Kinabalu. So okay, the place is at Kinabalu, so he will be at Sabah and Sarawak. So the rates at Sabah and Sarawak will apply instead. Okay. He bought his 5-year-old 4-wheel vehicle with a capacity of 2.5cc. The amount to be insured of his 2.5,000 cc, is it? 2.5cc is insane. 4-wheel vehicle is 2.5 is insane. 2,500, okay, so it's 2,500cc. The amount to be insured of this vehicle is 70,000. This is important as well. Given the NCD in the 6th year is 55%, calculate the gross premium. Calculate the gross premium of the motor insurance for the comprehensive policy, third party for and theft, and third party policy. This is basically the entire question. You can see it's 5 marks. Okay, so let's go through it and how do we calculate. First things first, the age of the car, as the age of the vehicle does not matter. 5-year-old doesn't, 5-year-old blah blah doesn't matter. Okay, so NCD in the 6th year also doesn't matter. You only need to know NCD in which year it doesn't matter. If we get the capacity, the place is important. We know that he's now in Kota Kinabalu, so the rates in Sabah and Sarawak apply. We do not need to care about Peninsula, so that the first 2 columns, just ignore it. Then, with capacity of 2.5k, it's supposed to be 1,000. I do not know, that is memang a typo. 2.5cc is impossible. So 2,500 cc, so there will be 2,500 cc. Therefore, you can look at the very first column, engine capacity does not exist. So you want to locate where it would land on. So you can see that the engine capacity does not exist. 2200, it exists already, so definitely not this one. Then you go to the next one, 3050. The engine capacity does not exist. This definitely did not. Definitely does not. Therefore, we will be looking at this column, this row. So these numbers are the basic premium for the first 1,000. For the first 1,000 of your insurance. For the first 1,000. So information we have is Kinabalu. So we'll be looking at Sabah and Sarawak for the rates. CC is 2.5k. So that will be not exceeding 3050. So we'll be looking at that particular row for our payment. The amount to be insured, in this case, is 70,000. And then your NCD, no claim discount, is 55%. So you want to calculate gross premium of all 3 different policies. Now, before I proceed, what are the differences between the policies? Okay, I'll use this portion. I'll use pink for this. I'll use green for this. Let's say your car smashes into another person's car. Okay, let's just draw it like this. I do not know how to draw an exact car. This is you, this is them. If you smash into another person's car, what can happen? You can get injured. The car can get damaged. The other person can get injured. And then the other person's car can get damaged. In all circumstances, your own injury is not covered. In all circumstances, your own injury is not covered at all. Okay, but your own injury is not covered at all, but the other things are covered. So, this also includes your car getting set on fire. Orange color. I don't know how to draw fire, please forgive me. And then you also can have your car getting stolen, so that will be under theft. Comprehensive policy covers everything except for you getting injured. Anyway, you getting injured is not getting covered anyway. That will be under your own medical policy, or the other person's, or the other person's car insurance, or the other person's motor insurance if they were the one who hit you. In this case, if you were the one who hit them, your own injuries will not be covered no matter what. That will be under your own medical policy, which is a different thing, your own medical insurance. Everything else, your own car's damage, their injuries, their damage, your car set on fire, your car getting stolen, all these are covered under the comprehensive policy. So I'll label these 1, 2, 3, 4, 5 comprehensive policy. Covers all 1 to 5. Third party, there's a second one lower down in the hierarchy called third party fire and theft policy. This means only third party gets covered, which means your own car's damage, your car's damage does not get covered at all. So this should be 2 to 5. The last one, which is the cheapest of all, is the third party policy. You yourself do not get covered, so your own car doesn't get covered. Furthermore, fire and theft do not get covered as well, so this would be third party only, which should be 2 and 3 only. So these are the differences between the three policies, and that's why comprehensive is the most expensive one. Third party fire and theft is derived. The premium is derived from comprehensive policy. Third party you calculate separately. It is the cheapest out of all. Okay. Yeah. Okay. So let's look at it. If you read the question, it tells you that this table shows the premium proportions under motor tariff for motor policies issued in Peninsular Malaysia and Sabah and Sarawak. It doesn't tell you anything else. It should actually, but in this case, I believe that you might have to memorize it. Okay. So what do you have to memorize based on this one? Firstly, let's go through comprehensive policy first. Then we can talk about it. Okay, back to here. Okay, I believe that was in full view, right? Yeah, you can see that. Okay, cool. I keep switching back to my placing space. Okay, comprehensive policy, first one. Your first down, this is actually your comprehensive policy. This number by itself is actually charging to your first 1,000. So your basic premium, I'll use purple for this. Your basic premium in this case, because it doesn't exceed 3,050, so we'll be looking at that figure. So that will be 266.5. Your basic premium is 266.5. This is charged to the first 1,000 of your amount of the amount to be insured. Okay, so this is actually for the first 1,000. Okay. Then your remaining portion, which should be your remaining 69,000, you will need to multiply your remaining 69,000. So the remaining premium in this case, you will need to take 26 ringgit and okay, depending on where you are, the number is different. So you have 69,000. The remaining premium is calculated per 1,000. So just put 69 here first. Okay. If you are in Okay, let me just work this out. If you are in Peninsular Malaysia, so anywhere other than Sabah and Sarawak, this amount will be 26 ringgit per thousand of remaining payable, remaining amount to be insured. If you are in Sabah and Sarawak, let's just put SS. We can put SASA, I guess. If you are in Sabah and Sarawak, which is the other side of the country, your amount to be paid is 20 ringgit 30 cent. This is stated in the textbook. If you go through your workbook on your hand, you should be able to see this as well. You might also have encountered this when you were going through the past years or whatnot, the practice questions. I'm not sure why this question did not give this info, but this is according to a textbook. They didn't change the info in the textbook, so we will still be using this no matter what, unless the question states otherwise. Okay, so if the question says this or the question doesn't say, just assume that this is the case. You can refer to the textbook, is in there. You can also refer to the workbook. Just that. So since we are in Sabah and Sarawak, we will be multiplying this 2069 over here by 20 ringgit 30 cent. So this will give us an amount of, let's just calculate it out. Okay, so you will get 1400.70 cent. So therefore your total premium to be payable will be this plus this, so 1400.7 plus 266.5. This will get you, let me just move this over here. I'm not sure if you can see or not. You can, okay. Oh, this one. This one is good. Yeah, we start. Okay, so this one you will get, let me just add this on the calculator. You get 1667.20. Okay, but we are not done yet. To calculate your gross premium, you still want to get rid of your NCD. So NCD in this is 55%. So NCD refers to no claim discount, which refers to the situation when you do not need to claim the insurance. If you're NCD, this means that if you don't claim the insurance for like the entire year, you get a discount to your premium. You get a discount to your premium. Okay? You get a sorry, adjusting my mic. You get a discount to your premium. So in this case, you get a discount of 55%, which is frankly quite high. So in this case, your gross premium, you can calculate it out by taking your total premium, in this case 1667.2 and multiply by the remaining portion, which should be 45%. Okay, so this will get you Ringgit Malaysia 750.24 cent. So this is comprehensive policy, and this is how much you have to pay per year. This is per year, by the way. This is per year. So yes. Okay. So after that, we can look at the other two, third party fire and theft, and also third party. Okay. I'll put my screen over here. So 2 will be third party, fire and theft. I know this name is quite long, but it is called that. They not be changing it, so we just follow lah. Okay. For the third party fire and theft, you can see that there is no corresponding column in the table. So what do? Our basic premium is, you take the total premium of your comprehensive policy. So this will be 1667.2, and then you multiply it by 75%. 1667.2 you multiply by 75%. Multiply by 75%, you get Ringgit Malaysia 1250.4. And then from here on, you will still calculate your NCD. Your NCD is 55% no matter what. Therefore, your gross premium in this case is this one multiplied by 45%, so that will be 5262.68, and that's basically it. So the last one is the party. You can observe that only got a comprehensive policy needs to have this much. So first 1,000 how much, and then remaining multiply. That applies only to comprehensive policy. If you and then you can see that the gross premium is quite cheap but this is like per year. It is like per year, per month. Usually it's per year. If it's per month, then it's a bit too expensive. No, this is per year, this is per year. Per month is too expensive, this is per year. Depending. If we look back at this one, this is per year. But if your insurance happens to cover a lot more, your premium can go like up to 100 something. Like I know some of the bank, because banks they want to extend their they want to get business, so most banks have their own insurance as well. I know one of the banks that have a credit card with the UOB. They do offer insurance. They do offer insurance like life and medical combined together. The monthly premium is 131 ringgit. For now, how many cents? I forgot already. If you look at it, it's kind of expensive, but it's basically life and medical combined together into one. So whether it's worth it or not depends on you. If you already have an insurance, then I believe your parents buy insurance for you. So you don't really have to purchase anymore, unless you think that you want more coverage, you want like extra coverage, or like you want to cover different parts of your life. So like you can have one life, one medical, or life and medical maybe combined, and then one motor, one fire for the house and stuff like that. And then like if you go travel, you can buy travel insurance, and then if you go to invest in the stock market, you can buy insurance for that as well. Like you can get your saving, you can get your money covered in that sense. Pay money to cover your money. You get insurance for your money. Does that make sense? Anyway, back to this. So your basic premium will be on the same table. So that will be 93.60. There isn't a first 1,000 kind of thing going on here. So this one is also NCD 55%. This one does have your no claim discount no matter what anyway. So your gross premium in this case, you want to just take this number and multiply 45% as per usual. So 93.60 times 45%, 5. You get Ringgit Malaysia 42.12. You can see that third party is way cheaper, but also because it does not cover anything other than you hitting someone else, which is frankly speaking, if you drive carefully enough, will not happen at all in the entire year. So in that case, I don't think if you think you want to cover for that only for whatever reason, then just pay that much per year. It's very cheap. But if you want to have more coverage, then just get a comprehensive policy or at least get a third party for and have if you want to save a bit and you don't mind your car, like you do not mind getting your insurance for your car. But anyway, this is motor insurance and that's done. So let's move on to the next one. Next page. Yay. Okay. So next up on the list will be medical insurance. How long have I streamed? Half an hour. Makes sense. About that. It takes this much time to teach in class anyway. Okay, medical insurance. No, wait, let me see this one. Sharekar Lemongrass has 3 lorries for the use of the company. They have vehicle insurance for each lorry with a deductible at the allocation of 940. During the insurance period, the 3 lorries accidents and loss suffered are as a table. So the compensation can be claimed for each loss suffered. Okay, so okay, so basically the idea is this. If your insurance has a deductible allocation, you have to deduct the deductible allocation. You have to pay that no matter what before you do any claim. So what I'm saying is that for this type of I pressed it again. For this type of question, the idea is just teaching you about deductible insurance. You see, for the first one A, your loss is 780, but you have to pay 940 in order to be able to claim for the 780. So in this case, you are better off just paying that loss for yourself. So you don't get any compensation because you have to pay your deductible, which is already higher than your loss, so you don't get any claims. For B, you get so this is none. For part B, you get 1,000. You lost 1,000. You have to pay 940 to claim the remaining portion, so you get a claim of 60. For C, your loss is 2,370, so you have to minus out your 940 to be able to claim the remaining portion, which is 1,430. So it's just that lah. Okay, done. You just state the compensation must state ma. So this is just I don't know why it's 4 marks, but anyway, marks is marks. Next, medical insurance. Okay, fire medical insurance. Medical insurance is quite easy. It's just a bit different in a way such that you have your deductible provision. Your deductible provision, you have to pay that deductible first no matter what before you do a claim. So the deductible is your own to bear lah. The amount is usually thousand something, hundreds to thousands lah. And then the other thing that we have over here is the percentage of your co-insurance. So in this case, what we have is that, okay, let me just write this out. We are talking about this one. I can't see that. I'll put it here. We are talking about medical insurance. So medical insurance introduces 2 things. One, your deductible amount. This is the amount of money you have to pay to the insurance company no matter what before you make any claim. So this amount is yours to bear no matter what. Second, co-insurance provision percentage. Let's say this number is 80-20. What this means is if you want to make a claim after you pay the deductible, the remaining loss, 80% to be borne by the insurance company, so that will be given back to you. 20% will be your own to bear. So the bigger number is usually for the insurance company. If the lesser number is for the insurance company, then there's no point in buying insurance anymore. So the bigger number is for the insurance company to bear and give back to you as compensation. The smaller number, 20 over here in this case, is your own to bear, so you need to pay that. The number will be different depending on what the question gives you, or in real life which company or which plan you're buying. So 60-40, 70-30, 65-35, all these are common numbers. All 75-25, all these are common enough percentage numbers. Yeah. So in this case, if you look at the question, it tells you that Angel and Mana have purchased medical insurance with a co-insurance provision. So it usually has a deductible amount, but it doesn't state any here. So maybe not. Maybe it doesn't have any in this case. If it doesn't state it has a deductible, then it doesn't have any. Then a co-insurance provision means that there's a percentage. So if Ch3 Math has to bear 2200 of his total medical bill amounting to 11,000, what percentage of co-insurance of the insurance? What is the percentage of the co-insurance of the insurance policy? So in this case, if you want to calculate the percentage that he has to bear, this percentage of Ch3 Math has to bear, just take the amount that he has to pay, divide by the total medical bill. It usually has a deductible amount, but in this case, because we are straight up finding the co-insurance percentage instead, we do not need to care about whether there's a deductible or not. If we are finding how much he has to bear, the cost that he has to bear, then we need the deductible amount to be present. In this case, we don't need it, so the question doesn't give any. Just calculate this out, you will get this to be 20%. 20, wait, is that correct? Let me just double check. I know it's correct. Yes, it's correct. Great. 20%. So this is the portion that he has to bear on his own. Therefore, the co-insurance percentage in this case, it means I do not. Is it loud enough? My own voice. Okay, seems good enough. Great. Okay, continue. Okay, so your co-insurance percentage in this case would be 80-20. So 20% Ch3 Math's own bear, and Ch3 Math, the remaining 80% for the insurance company. So this should be your answer lah. Okay, we're done already. I do not know why it's 4 marks. It looks a bit suspicious, but you don't have anything else to do other than this. Okay, we move on to the last one for insurance. Fire. Fire is a bit involved. You have 3. We look at the question, then we can talk about that. Okay, question 5 says Sabrina bought a policy for a fire insurance for her house worth 300,000, which requires 80% co-insurance. So 80% is the minimum portion that you have to insure. The market value for her house is 400,000, and explosion occurred while Sabrina was cooking, which resulted in a loss of 90,000. How much compensation can Sabrina claim from the insurance company? Okay. Okay, fire insurance uses one thing, which is the minimum insurable value. In this case, this means that if your house market is this much, to enjoy full compensation, you need to buy at least 80% or whichever is indicated by the question. In this case, for Q5, your base value or the market value of a house is 400,000. This is the minimum insurable. This is more like the required insurable value. Required insured value. This would be 400,000, the market value of the house, multiplied by 80%, which is required as per the question. So this will get you 320,000. Okay, but as you can see, she only bought 300,000 worth of insurance. It's not yet reached the insurable value. Therefore, in this case, if you want to calculate if you, so how much, so if you want to calculate how much compensation that this person can receive, that she can receive back, you will do this. If she did insure for the full 80% of the house, she would be compensated full. So that would be 90,000 provided back full to her. Provided full to her after deducting whatever deductible she has to pay. So that would be 90,000 full to her. But since now she did not, she will need to bear the cost of not buying the full portion of the insurance. So let me just double check how much she has to pay. Okay, I seem to have the answer. Okay, so the amount that is to buy is 32 lah, 320. She has to buy 320,000, but she only bought the 300,000. So her compensation will be calculated like this. You want to take the amount that the person bought, the amount of insurance that the person bought, dividing by the amount of insurance that is required, multiplying by the loss that they suffered, in this case 90,000, and then this one would you usually minus how much deductible, you usually minus any deductible, but in this case, since there is none, you just calculate that backly. So this one, you will get your amount to be the compensation that you will get is 84375. You can see it's basically a ratio. Yeah, it's basically a ratio. So you take the one that you bought and the one that's required, you form a ratio. So if you bought full, this means you get full 90,000 back. If you bought partial insurance, then you only get that, and you only get then you only get that much of your loss back. Yeah, you only get this much ratio of your loss back. So this will be the compensation lah. Yeah. Yeah. Then there is also a co-insurance penalty. So this is the compensation that I should be able to claim back. I do not know why it's 5 marks is a bit too much, but anyway, this is that. If the question asks for calculating the co-insurance penalty, we can further talk about it. This co-insurance penalty is the amount that they will need to pay, which is basically her loss minus the amount of compensation she got. So the person they got. So the co-insurance penalty, if the question asks for it, is basically taking your loss, 90,000, minus the amount of compensation that you got back. So this is the amount that you have to bear your own, basically. This is the amount that you have to bear on your own, basically. So without any deductible, by the way. Yeah, so this will be, we will not be considering the deductible for this kind of thing, for the co-insurance penalty. Just take the basic compensation. Yeah. Yeah. So in this case, your co-insurance penalty, if needed, would be 5625. Yeah. So that would be your co-insurance penalty if needed, if the question requests for it. But anything else, this will be it. By the way, there are 3 types. You have full compensation if you bought the full value. You have partial compensation if you only bought partial insurance. And then you have the case where it's total loss, so your house is just gone entirely with no salvageable equipment in it, with nothing salvageable. So if it's a total loss, you just get paid back however left. So if your entire house burned down and you suffer a total loss of 20,000, 200,000, you just get paid back that much. Yeah, minus the deductible. Yes, minus the deductible. You just get paid back that much minus the deductible. Other than that, there's something else already. So yeah, there are 3 cases lah. So full compensation, partial compensation, and total loss. Okay. This is void, right? I remember. Oh no, it's void stuff. This is works 3, works 2. Never mind. Okay, last one. So Q6, engine challenge shop has suffered a fire and the loss suffered is the 130,000. The shop has fire insurance with co-insurance for 80% and deductible of 8,000. If the current value of the shop is 500,000 and the total compensation received when engine challenge is 95,000, calculate the amount insurance that engine challenge has bought for its shop. So this is basically Q5, but you reverse the process a little bit. Okay. Okay, so the required insurance, the required insured value in this case, the required insurance in this case is the token value of the shop, 500,000. You multiply by co-insurance of 80%, you will get it to be 400,000. Okay. The amount of compensation received, the amount of compensation can be calculated by using a method on top. So the amount of insurance that he has bought, so this should be the amount bought dividing the amount of required the amount required the amount required insurance, and then multiplying by the loss suffered. So in this case it's 130,000 minus out the deductible. In this case it will be 8,000. So we know that this is equal to 95,000. So you just rearrange things lah. Yeah, we use a different color for this. So in this case, your bought over 400,000 multiplying 130,000 equals to 8,000, bring over, minus become plus, so you get 103,000, like 103,000. Then you just bring everything over. So your bought insurance in this case equals to 103,000 over 130,000 multiplying 400,000. So this will get you why is it such a weird number? 316,923.08. You usually wouldn't want to buy this amount of insurance. You want a whole number. I do not know why this question is like that. I cannot see if anything is wrong. So yeah, this should be the case. Yes, this should be the case. Yeah, so that will be the amount of insurance that I bought. There's nothing else you need already, so that is done. Okay, insurance in total 4 types. Life insurance, the easiest one, just find which number you have to multiply and multiply it. Motor insurance, the most tedious one, 3 different types. Just remember that comprehensive is the most involved one. First 1,000 and then you remaining multiply by whatever number depending on where you are. Third party for and theft and third party are just easy, just copy the numbers and multiply by however NCD that you need. Then medical insurance, you have deductible and co-insurance policy, a co-insurance percentage. So the insurance company will pay portion of the larger portion of it, you pay the smaller portion of it. And then the last one is fire, but you have to deduct, right? You have to minus out you have to pay the deductible no matter what before claiming. Then fire insurance, you have to minus out from the total amount. Then fire insurance, you want to, depending on how much you insure, you'll get a portion of your loss back. So if you insure full, then you get full. If you insure part of it, then you get part of your loss back. If your property burns out entirely and you suffer a total loss, you just only get that much back. You can't get anything higher than that. So let's say your market value of your house is 400,000, but your total loss and you are left with nothing but 200,000, then you only get that much back. You only get 200,000 back. Yeah. So you only get 200,000 back. Yeah. So that's that lah. Okay, done. Last but not least, tax. Tax is not that hard other than income tax. Yeah. Do they not give the table? Okay, that's actually weird. PITS. Oh, okay. Okay, they do not give the table. Be assured that you will be given a table in the exam. It does not expect you to memorize. I will need to look up the table later. Yeah, I will actually need to look up the table later. Malaysia tax table. You can see that this is the tax rate. Okay. You can see, you might not be able to see. This is the okay. This is the amount of tax payable. Okay, anyway. Okay. Okay, anyway. This table is from the tax, is from LHDN, Lembaga Hasil dan Negara. It is the government body that collects tax. Yeah, it's a government body that collects tax for you, from all of us. So this particular table over here, I wish I can move it, but I'll need to show the question later. So, okay, so this will be this is the table that we're given. So it's just look it up yourself for now. It will be given in the paper no matter what, because you're not expected to memorize this. Okay, let's go back to the question. Faham sah as an inner, so we want to calculate income tax. You want to do a few things. Income tax. Okay, so you have an annual income. that includes allowance, divided by annual income. So okay, your annual income in this case is 114,000, and then you want to minus out all your allowances and whatnot. Okay, so because starting from your annual income, you want to minus out everything that you do not need to pay tax for. So usually that would be donations, your allowances, your tax exempted allowances, and also your donations, and also whatever tax relief that you have based on the table given in the question or in written sentence form. Okay. So let's look at it. The allowances that you have in this case is 14400. Your donation in this case is 500, and then your tax relief, you have your individual tax relief. This is for everyone. Your medical insurance, your education and medical insurance. Take note that there is a cap. The lifestyle limited to 2,500. It didn't exceed the cap, so we take full amount. Education fees, we take 550. Okay. So draw a line. Your chargeable income, is basically taking your annual income and minusing out all of these. Okay, so all your tax reliefs add up together. $9,210, 2500, 5500. There will be 19,100. So chargeable income in this case, it is equal to 11400 minus 14400 minus 5,000 minus 19,100. So you get a chargeable income of 75,500. There's quite a lot of deduction, but it's still a quite large number. So let's look at the table to see how much tax this person has to pay. Okay. So if we switch to the table, and then we want to look for a category where the chargeable income falls within the range. So in this case, this one is 50,000 to 700,000. It's definitely not what we want. So we look at the next one, 70,000 to 100,000. Our income falls between this. So we want to use this one to calculate it out. So we use this row directly. Your base tax, which is basically the first 1,000 of your tax. The first how many? Your base tax in this case for this category is the first 70,000. So you get charged an amount of 3,700. Okay. Then your remaining tax is just take your chargeable income minus out the first large portion, then you multiply this difference by the percentage stated by the question. It is now 19%. Okay, so you just take 75500 minus 70,000. You get 5,500. This multiply this by 19% as given by the table. 0.19. You get remaining a tax of 1,049. So this is your remaining tax you have to pay. Okay. Then we look back at this one. Okay. Chargeable income is quite low, then part B is this income tax you paid. So it's actually this already. Your base tax is 35,000 and your saving friend. Oops, sorry, I got blanked out for a bit there. So back to this one. Your remaining tax will be this, so your total tax, the total tax payable in this case would be 3,700 plus however many your remaining tax is, so you get a ringgit Malaysia of 4745, and then else you need to do, this will be your answer. Yeah, okay. And then nothing else you need to do, this should be your answer. Yeah, so that will be that. So basically, okay, after this there are two things you want to do. If there is zakat, you want to minus it out. If there is PCB, potongan cukai bulanan, you also want to minus it out. If your chargeable income is less than 35,000, you want to pay back, you have a tax rebate of 400. Yeah, so green. If chargeable income less than 35,000, or if your chargeable income is less than 3,500, if your chargeable income is less than 35,000, you, after calculating out your total tax payable, you will get a tax rebate of of 400. Yeah. Other than that, there's nothing else. If there's zakat, minus out the zakat. If there's PCB, minus out the PCB, and that would be it. Yeah, it's not really involved for this type of question. It's just sometimes long. Yeah. It's just sometimes quite long. Yeah. Okay, next. Madam Shin owns a residential house in Johor Bahru. Estimated monthly rental for the property assessment tax rate of the house are 1.20 and 8% respectively. Okay, back to business. Yeah, test 1 2, test 1 2. Okay. Cool. Okay, back to business. So next, managing observation the house, there will be income tax. There will be income tax. Okay. There will be income tax. So next, managing observation the house in Johor Bahru, the estimated monthly rental and the property assessment tax rate of the house are 1,200 and 8.7 respectively. Calculate the annual property assessment tax payable by the nation. For this one, you just multiply will do. Your property assessment tax rate is taxed to the estimated value of the house, which if you have acquired rental and whatnot, then those your house will be when you can yeah, just multiply. You can try yourself. Yeah. Then question 3, Mr. Bala has 2 units of houses with the area of 140 and 102 in the same housing state. If the quick rent levy is 0.5 rent. This means I'm tired. Anyway, but yeah, Property exception tax, you want to just multiply. You want to get the value of the house, value of the property. So in this case, you just take your monthly rental 1,200 multiplied by 12. You get the estimated annual rental. Then multiply by the 8.7%, and that's basically it. That's why it's 2 marks. Okay, question 3. Two units of houses with the area of 140 and 102. Same housing said if the quick rent rate levied is 0.51 per meter square, calculate the quick rent payable by Mr. Bala every year. The meter square. So the quick rent is the quick rent multiplied by the meter square. So in this case, just take your 0.51 multiplied by both areas, add them together, and that will be the answer already. I don't think I need to demonstrate it. This is simple enough. The only hard part for this entire chapter is income tax. Okay, question 4. When we rented a room at a local hotel in Siaman Sabah for 188 per night, we stay at the hotel for 4 nights. Okay, the service tax will be paid if the hotel charge 6% for service tax. Service tax SST is 6% plus 10%. So usually in this case, it didn't say anything, so we just assume 6%. Therefore, to calculate out, just take 188 multiplied by how many nights and then multiply by 6%, and that's basically it. Done. Next. Okay. So the rest are easy. Okay, Q5. This one is electrical. Okay, I need to do Q7 as well. Okay, this one is electrical. So let's talk about this. Okay, electrical, domestic tariff rate. For electrical bills, you want to calculate service tax, yeah. So you want to, I'll just talk about all of it. Okay. So the electrical ones, you can be either asked to calculate the electricity bill directly, or you're asked to calculate the service tax as per this question. So this would be electrical bill plus tax plus the corresponding tax. This is panel, is it? Yeah, panel 3. Okay. Oops. Okay. 750 kilowatt per hour. Kilowatt per hour. So based on how much you use, each portion of your electricity bill will be charged differently. Your tariff rate will be charged differently. And then the notes over says the usage more than 600 kilowatt hour in a month will be charged with 6% of service tax. Okay. So in this case, your 750 can be distributed into the first 600 plus the remaining 150 or 250. Then this can be split into your first 200 plus your second 100 plus the 300 plus 150. I need to split into this because according to the table, however many you use, you will charge differently. So the electricity bill can be calculated like this. Your first 200 will be charged with a rate of 0.218 per kilowatt hour. Your next 100 will be charged with a rate of 0.334 per kilowatt hour. Your next 300 will be charged with 0.516 per kilowatt hour. Then the remaining 150 will be charged with a rate of 0.546 per hour. And then the portion that is more than 600 will be charged with 6% service tax, which will be the remaining 150 over here. So just take this one, multiply by 6%, so that will be 0.06. That will be plus 0.06, so is 1, so there will be 6% more, so it will be 1.06 or 106%. So just calculate this out, then you get your electricity bill. If the question asks for your electricity bill, then you need to calculate this out. 100 times 33.334, 300 times 0.516, plus 150 times 0.546 times 1.06, 106%. Your total electricity bill for this person, it will be 318.61. Yeah, 318.61. Okay. Therefore, the interest, the service tax paid for this month would be this entire thing lah. So the service tax acts only on the portion after 600, so the 150 multiplied by the rate, and then multiply, in this case you only need to multiply by 0.06 because you only want the service tax but not the total amount charged. Therefore just multiply by 0.06, then you will get a number so you get a number of 4.91. So this is the amount of service tax charge, 4 ringgit. Yeah. Okay, then this is it lah. This is the electricity bill. Yeah, done already. This is good enough. Done and dusted. Okay, so before I end it, let's look at one more income tax question that's a bit more involved. Listening to. Oh, yeah, sorry. Sure. Yeah, excellent connection. Can I pause this? I think I need the preview. As long as I know it's running the screen already. Okay, before I end this one, let's look at one more income tax question. So if you look at the screen, it says city receives an annual income. City receives an annual income of income tax. Okay, I'll just click it lah. The city received annual income of 68,800 in the year 2020. She claimed the tax relief. For individual for 9,000, life insurance and APF for 4800, lifestyle for 2500, medical insurance for 1400, and her mother's medical expenses for 1200. She donated 500 to a government approved welfare organization and made zakat for 400 that year. Part A, no matter what, you just calculate her chargeable income first. Okay, so her annual income in this case is 68800. Okay, the tax relief is as follows. $9,000, life insurance and EPF 508,000, lifestyle 2,500, medical insurance 1,400, mother's medical expenses 1,200. Then the donation in this case is 500. We do not calculate zakat first because zakat is only calculated after you calculate the tax. Then only you deduct out. But for calculating the chargeable income, we do not minus out the zakat. We do minus out the donation though. Yeah, so that these two are different. Therefore, your chargeable income in this case is just taking your annual income and minusing out all of the tax reliefs plus your donation. So 68800 minus 9,000 minus 5800 minus 2500 minus 1400 minus 1200. We don't know how much. We don't actually know the limit for each category. Okay, we know, but we don't memorize it, and it's not given in the question, so we just assume that they are all not exceeded lah. Okay, and then you minus out your donation 500. So your chargeable income in this case is 48400. So this should be the first portion. This gives you 3 marks according to that. And after that, you want to calculate your income tax payable. So we need to go back to the table where it didn't give again. So in this case, 48400, this will fall under the range between 35,000 to 50,000. This will be portion donkey over here. Yeah, I think you can see this part of the stream. Yeah, you can see this part. So we will again split this into, we have located our category. So in this case, we will again split it into 2 different portions. On the first 35,000, we will have a certain number that will be deducted. So analyze this. This looks real weird right now. Okay, so you see on the first 35,000, we on the first 35,000, we deduct 600. Okay, so this is your basic tax. Then for the next portion, the next remaining portion, you want to multiply by this percentage, which we given here is 6%. The 900 over here is the cap, a maximum of 900 or maximum of 900. Okay, then if your income is more than that, then you just move on to the next category. Yeah, if your income is more than that, then you just move on to the next category. Okay, does that make sense? Yeah. Okay. So yeah lor, on the first 35,000, then you need to pay 600. It's given over here, 600. Okay. Then the remaining portion you multiply by this particular percentage number over here. Percentage. Okay, back to full screen. So okay. So your base tax. Your base tax is equal to your first 3,500, the first portion, so it will be 600 as given by the table. Your remaining tax, you want to take 48400 minus out the first 35,000, and this one you want to multiply by the 6% that's given by in the table. So this would be 13400. Yeah, this will be 13400 multiplied by 6%. So you get 804 ringgit Malaysia. Yeah. Yeah. So you get 804 ringgit Malaysia, and therefore this should be your total tax payable. This will be 600 plus 804. This will get you 1404 ringgit Malaysia. So this is the total tax payable. Okay. Then moving back to this one. Yeah. So after this, you still want to minus out however tax rebates you have. First thing, if your chargeable income, as we have said this now, if your chargeable income is less than 35,000, you get a 400 tax rebate. But in this case, your chargeable income is more than that already, so we don't have that anymore. Second, you have your zakat. You want to minus out your zakat for that year. So in this case, your zakat in this case is 400. Your zakat in this case is 400. Therefore, your tax payable in this case would be this minus out your zakat, so that would be 1004. Okay, I'll just write it out lah. So 1404 minus 400, you get a tax payable of 1004 ringgit Malaysia, 1004 ringgit Malaysia. So that will be that. Then lastly, if the question says that they also have PCB pengeluaran cukai bulanan, then you want to deduct that as well. You see, part C, it says if city salary is deducted of 250 of PCB monthly, determine whether city will receive returns of excess income tax payment. 250 per month is a lot actually. Yeah. So in this case, a PCB will be 250 monthly for 12 months for the entire year. So in this case, that will be 3,000. Let me just double check my answer. Yep, that will be a PCB of 3,000. Therefore, surplus of tax will be equal to 1,400 minus out the PCB. So she'll get a negative amount of ringgit Malaysia 1996. Yeah. To get an amount of 1996. Yeah. So therefore, what this means is that she after all this, she doesn't have to pay any tax at all, and instead she will receive the more better ways receive a refund of ringgit Malaysia 1996 due to excess payment of PCB. Yeah. So the idea is this: if you minus out zakat first, if you have any, then you minus your PCB. If your tax payable is rendered to the negative by zakat, you do not get any refund for the zakat. If your tax is rendered to zero by your PCB, then you get refund for PCB. If your tax payable is rendered to zero on zakat but you still pay PCB, your PCB will be refunded to you full, if I'm not mistaken. I need to double check on this, but yeah. So basically, if they only have zakat, no PCB, then but your tax becomes negative due to zakat, you do not get any refunds because zakat is the money paid to the government already. It cannot be returned back to you. But anyway, that will be that. We are done. So that will be income tax. To be honest, taxation, the most important is income tax. The others are very easy questions. Maybe electricity tax, you have to be a bit more mindful that the first 200 is this rate, the next 100 is this rate, so on and so forth. But other than that, it's fine, and then it is fine. It is not really that hard. The most involved one is income tax. Then for insurance is motor insurance and maybe fire. Okay, that will be that. There is nothing else that we will need. So I will see you in the next one. Yeah.